Hello everyone, good morning. This is Sage, live from the 𝐊𝐿𝐴 studios in Sydney, and you're watching The Opening Trade, a show where we bring you or comment on how the Australian share market opened the trading session and the associated market drivers. So let's get started. Well, the Australian share market opened higher and the US stocks ended up overnight as the US Federal Reserve Chairman Jerome Powell eased concerns by saying that the recent inflation surge would soon fade. On Wall Street, the Dow Jones rose 0.13%. The S&P 500 added 0.12% and the Nasdaq Composite slipped 0.22%. Mr. Powell also said that US economy was still a way off from levels the Fed wanted to see before tapering its quantitative stimulus report. He further said that inflation will remain high for most of the year, but would eventually come down. The Fed chief reiterated that inflation would return to the central bank's 2% range. Powell's remarks relieved investors who were concerned inflation data would prompt the Fed to signal the beginning of tapering. And at the same time, inflation continues to run hot. The US producer prices surged in June to the largest annual gains in more than 10.5 years, the Labor Department said. A day earlier, it said consumer prices rose by the most in 13 years. And meanwhile, the lockdown in Sydney and muted oil prices are also putting pressure on domestic stocks. Oil prices dropped after Saudi Arabia and the United Arab Emirates reached a compromise. It should unlock a deal to boost global oil supplies as the world recovers from the coronavirus pandemic. And while looking at the Australian market open trades, the top performing stocks in this index were motor vehicle accessories manufacturer ARB Corporation and building products producer CSR Limited, while corporate travel management dipped amid Sydney lockdown woes. Then Whitehaven Coal soared despite reporting coal sales falls. St Barbara and Chalice Mining were also noted as the top percentage gainers on the ASX 200. And on the losers' side, the health supplements company Blackmores, medical device company Polynovo and aerial imagery technology company Nearmap edged lower. Let's move on now, taking a glance through the ASX sectoral charter. Well, the Australian technology shares traded lower during the early trades, taking cues from the weaker actions of Nasdaq overnight. Nuix and Nearmap slipped, while the BNPL players Afterpay and Zipco continue to witness pressures. There are reports coming in that Apple Pay is set to launch a buy now, pay later product that will also allow users to repay Apple Pay purchases in instalments over time. And reportedly, Goldman Sachs will serve as the lender for the loans necessary for instalment offerings. And meanwhile, the Australian energy majors Beach Energy, Santos, Origin Energy and Oil Search traded in the red zone amid the oil price downtick. Crude oil prices fell over 2% in the overnight trade. The US data revealed that demand weakened a bit in the most recent week. The fall in prices was also triggered by a compromise on supply reached out by the major global oil producers. And on that note, Brent crude settled 2.3% lower. West Texas Intermediate was slid 2.8%. And now let us move on to the miners space. Heavyweight miners BHP Group and Fortescue Metals traded lower, and Rio Tinto trading in the green territory amid the iron ore futures ticking higher in a range-bound trade. The most traded September iron ore on China's Dalian Commodity Exchange ended the daytime trade 0.8% higher. And meanwhile, the weak demand from China and uncertainty over surging inflation had put pressure on copper prices on Wednesday. On that note, ASX-listed copper players Oz Minerals and Sandfire Resources traded in the red territory during the early trading hours today. And then in the metal of the gold space, yellow metal space, Newcrest Mining, Evolution Mining, Ramelius and Gold Road edged up after Powell's comments. And now it's time for a short break, but please stay tuned as I'll be back with more updates for the Australian share market.
Hi, this is Andy Liu broadcasting from 𝐊𝐿𝐴 Media Studio in Australia, and I'll be hosting the new 𝐊𝐿𝐴 Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to 𝐊𝐿𝐴 TV and join me.
Welcome back, viewers. Hope your morning's going well. This is Sage, your host, live from the 𝐊𝐿𝐼𝐼 studios in sunny Sydney this morning, and you're watching the Opening Bell Show. Moving on now, let us take a look at the prominent ASX stocks under the spotlight during the early trades. To begin with, Spark Infrastructure Group was under the spotlight on confirming a takeover bid after the ASX query, and the company deals with investments in electricity distribution and transmission business. Spark Infrastructure Group has received a buyout proposal from private equity firm 𝐾𝐾R&Co and Ontario Teachers Pension Plan Board, valuing the electricity infrastructure investor at 4.91 billion Australian dollars. Spark shareholders will get $2.80 Australian for each share they own, which is nearly 13% premium to the stock's last traded price of $2.48 Australian on Wednesday. And this bid follows a failed $2.70 a share bid by the same consortium. Spark have turned down, saying it undervalued the company and was not at a level at which the company prepared to grant access to due diligence. Spark said on Thursday the fresh bid also undervalued the company, but it was prepared to engage with the consortium. The company entered a trading halt at 3:51 p.m. Australian Eastern Standard Time on Wednesday, more than an hour after its share price spiked. And meanwhile, next on the list of newsmakers is a global investment management business, Pendal Group edged up despite reporting June quarter outflows. The quarterly outflows were driven by sizable outflows in cash funds, according to the group. Its other portfolios, such as global equities, attracting inflows for the period. And Pendal Group's funds under management stood at 106.7 billion Australian dollars, up 5 billion Australian dollars from the previous quarter on the back of buoyant financial markets and investment performance. And the next stock that deserves closer attention is Sydney Airport. Slid on the takeover update, the airport operator said that 22 billion Australian dollar takeover bid from a group of institutional investors led by IFM investors was not in the best interests of security holders. The group also indicated that the indicative price was below the security price traded before the coronavirus pandemic. And according to the company, it is strongly positioned to deliver growth as vaccination rates increase and we move into the post-pandemic recovery period. Next, the Australian mid-tier gold producer Daikin Gold slipped on falling short of production guidance at Heffernan's and Mount Marvin open pits. The company reported total production of 106,919 ounces for the financial year 2021, missing its guidance of between 110,000 and 120,000 ounces. Moving on to the next stock making the headlines, Woodside Petroleum traded in the red zone despite robust oil prices soaring the revenue in the second quarter. Perhaps it is to do with the current oil price downtick. The second quarter revenue surged 15% from the March quarter, reaching 1.3 billion Australian dollars despite a decline in production for the Australian Petroleum Exploration and Production Company, while the 22.7 million barrels of oil produced in the most recent quarter marks a 4% drop from the first 3 months of the year and a 12% fall from the same period a year ago. Whitehaven Coal also made the news, trading in the green zone despite reporting coal sales falls. Total managed coal sales for the leading Australian producer of premium quality coal fell more than a fifth for the June quarter from the same period a year ago. Sales volumes for the financial year 2021 have been impacted by volume slippage associated with the infrastructure constraints at the Port of Newcastle and tight coal availability and variability in coal quality arising from the production issues at our Narrabri underground mine, the company said. Thanks for joining us on that report. That's all for now. We will be bringing more of the stock updates in our upcoming live shows during the day. Stay tuned to 𝐊𝐼𝐼 TV for more market updates across the economy, markets and sectors. Sage signing off.